How to identify a perfect shift in market structure. So let's go on to the chart and do this together. Okay, for the case study, I'll be working with silver, which is SAGUSD, and then we'll have rules. In this community, we'll work with rules because ICT concepts are rule based. Okay, so just before we get into the rules and the whole amazing lesson, let me just walk you through something and then um, we'll get started. So I want to show you something. Now, trend or market profile or tone talks about the underlying market condition or the present market condition. So as you can see from here now, if you check distance from this point up to this point, simply entails an uptrend, which is bullish trend. Now you have some small retracement here. This is not a reversal, it's just a retracement, a retracement, but then generally we are going bullish. Though on smaller time frames, these are going to be reversals, but on this big time frame, on higher time frame, is more like a retracement. So I want to give you a hack, and this hack will be very helpful for you. Now this hack talks about how we can identify an ideal shift in market structure. So I want to start from this point so that I won't have to explain much. Then we'll continue. Okay, so from the look of things, let's say you met price at this point. Let me use a vertical line to delineate this point. Let's start from here. So let's walk here all the way up. Okay, so you met price at this very point. Now look at something. Once price takes a low, once price takes a low, for instance, at this point now, this particular price leg is a low, but this low did not take it rejected, went up. Now once price takes a low with a body, it's called displacement. Once price takes a low with a body, that's displaced, and then forms a swing low, expect a downward trend as much as 50 pips sometimes. So let's check um, from this place. I want to check from this leg up till this leg, 75 pips. So on average, from my calculation, you have about 50 pips. So it's a hack. Please listen, pay attention. I'm going to talk about that again. Now same thing is happening here. Once price takes, like for instance now, this is a high, and this high came here but did not displace it because it's with it used a wick to poke this high. So once it did that, it means nothing to me. It's more like a rejection. Same thing happening here. It means nothing to me. It's more like a rejection. But watch this one now. This body displaced every of this high. Immediately displace this high. What am I waiting for? I'm waiting for a swing low to form. And once that swing low forms, I'm going to go bullish. That is go long, targeting 50 pips. So let's still check again. This is swing low, right? Okay, this is the swing low, and then so let's say from here you entered. Okay, let's go up about 90 something pips. Okay, so let's continue. Now we are waiting for price to take this high, any high with a body. So let's start from here. This part now, look at here. Price did not take this high with a body, not take this high with a body. So but here price took it with a body and then formed the swing low here. It went up. When price took this high with a body, formed the swing low, went up. So we are not doing anything here until price takes this high with a body, forms a swing low with target up. So it's just a, would I say, a general rule you can work with for your bias or the or whatever you want to call it. Now look at this. It does not give you setup every time, and it requires you to be patient. You understand? So let's now we are in a bearish tone. So the market switch has taken these lows with a body that's displaced them. What happened? Formed the swing low, went down. So what happened? What is happening here? You see why when I'm trading I like to study price action. It's not about using indicators or anything. I want to be able to read price logically and understand the narrative so that I can know when to change my stance and know where to stay per time, whether I'm going to be bullish or bearish. Now look at this. In our stance here we are bearish, but all of a sudden this was taken by what? This high was taken by a body, which means displacement. All we're waiting for is what? A swing low, and we target up. See it? So everything happening here, we're not doing anything until this one. This high and this high, they all got attacked by a body, displaced, swing low, we went up. So if you look at price action and study price action logically, you always see this. So watch this high now. was taken by a body, a swing low target, you definitely have up to 50 pips. Yeah, from my personal calculation and observation. But if you want to be careful, you can do 30 pips. That's fine. Then you know how to manage your risks and all that. Wait for a change in state of delivery and other conditions that can certify your your view. So look at this now. Watch. This low was not taken by this, so this is a rejection. Remember, this is a weak, another rejection. So whenever you see rejections, you are not going to do anything. It means price still intend going up, not going down. But at this point, price have finally taken this, right? Price have finally taken this point now, these two lows with a body. So you're waiting for a swing high to form, then we'll go low before we talk about going up. Then same thing is happening here. Now price has taken this place with a body. What are we waiting for? A swing low to form, which has formed. So we're expecting a kind of movement towards upward. I don't know if this is making sense. This is just a hack for it. So let's go to the rules and then make sense out of all this we've talked about now. So still on this, we'll talk about one, identify the trend. And how can you identify a trend? You identify a trend by looking at the higher time frame perspective or the higher time frame picture. So what are these higher time frame picture? We're talking about the weekly, the monthly, daily, and 4-hour chart. So you have to look at this chart to see what's going on there. So if I should go to a daily chart, okay, no, not this, sorry. Okay, so if I should go to a daily chart now, from this point I'm seeing more like a bearish run. It's more like a bearish run, so which means somehow we are in a bearish scenario. Yes, despite on the bigger time frame you see it's more like a bullish run, but we are in a bearish run right now. But that does not mean every day is going to be a bearish day. Even while we are in a bearish run, some days are bullish. So there is more to bias and all that. So this is not about bias. This is more about how to confirm a shift in market structure, like a perfect shift in market structure. And I've given you an overview or the scope of what we are going to be discussing. So identify the trend. The trend, from what you can see, is bullish on the daily chart. Sorry, bearish on the daily chart. But generally, on a long-term perspective, it has been bearish. Okay, so now I trade on 15 minutes and 1 hour. I like trading on lower time frame because it helps me risk very little and then targets, have a very nice target. So I transposed to 15 minutes chart. So let's go back to the rule. Narrative, wait for price to shift the tone of the story. I've showed you something. Make sure price uses the body to displace a high or low before you talk about changing your stance. Now, when I talk about changing stance, let's say I like boxing, so let me just give an instance now. Let's say in boxing we have orthodox and southpaw stance, which are those people using rights are the orthodox, the left boxers are the the southpaw. But you have some amazing or exceptional boxers who can take both stand, and as a trader you need that skill because at some point you have to sell, at some point you have to buy. So that's what I'm talking about, stance. You need to know when to change your stance when we are moving from bearish to bullish and when we're moving from bullish to bearish. So at every point in the marketplace you need to know how to change your stance and not get caught up by any hook or any anything that is going to crush you. So let's continue. So I have to wait for the tone of the story to shift. So another thing is we look for institutional signature. So let's go back to this. So now on the 15-minute chart, you see that when we came down to this 15-minute chart now, a different story is playing out here. A different story, yes, is playing out here because watch. On the daily chart, we saw a bearish run. This is the 15-minute chart, but now we are seeing a bullish run, which means if you watch, yes, we have some bearish candles here, but the bullish candles are becoming stronger, thicker, and even bigger. So showing you that the institutional signature is talking about bullish, buy. And then if you check out the last video on ICT OTE model, ultimate trader entry, I talked about something of this nature, where from a bearish run to this, so I'm taking this low, price comes here, you go for you break down to 1 minute or 3 minutes and check for a shift in market structure going downwards, then you can sell. So I talked about it. Check out for that in the last video. So price is likely coming to attack this this high before going downwards or into this last fair value gap, any of these fair value gap. So that's it. You can still check out for the lesson on last fair value gap. It will be very, very helpful for you. So let me take the fib out. That's not the focus of this lesson. Okay, so on the rule again, talk about keep an eye on key levels. Key levels such as what? Highs, lows, and FVGs, fair value gaps, and then check economic calendar. So we're going to do this together. Let me talk about checking economic calendar before you trade. So before you trade on the lower time frame, please check your economic calendar. I use forexfactory.com for my economic calendar. So identify the high impact and the low impact news. I have a video on this lesson on my shorts on how to set up your economic calendar to suit your time frame and all that. So check out this high impact news are the red folder news, then the medium impact are the orange or yellow folder news. I don't really check out for the other ones like the minor news and all that. So these are the things you need to check. So when you want to trade, if there is an economic, if there's a news, high impact news coming in by that time, especially high impact news, sometimes the medium impact news they don't used to be that effective or effectual. So this high impact news they can actually alter things in the marketplace. That is why you want to either stay out of them if you are a neophyte or new trader. So please check your economic calendar. So let's go back to the next rule that says okay, keep an eye on key levels. So let's identify various key levels now. So key levels talk about high, lows, and FVGs, fair value gaps. Okay, so I'm going to identify various highs, lows, and FVGs. Okay, so let's go. I will use this. This is a high, and that is where I'm expecting price to likely come to before going down. I want to see price come there because price has taken this high. Mind you, I talked about something earlier. Price has taken this high, so I'm waiting for a swing low to form to go up, right? So I really want to see price come to this point, unless I will see under signature going downward. So I don't do anything until I see price telling me something. So I have to see the signature of price for me to make any move. I'm very careful about that. Okay, so just a moment. I've identified this low as well. So this high and low, that is my dealing range. Okay, so let me outline some other intermediate, what's it called, intermediate highs and lows. So let me take this one and I want to use yellow. Okay, so that's for this, and also I think I need this one. Oh, no, I want to use the ray. Okay, yeah, so that's this, and okay, and also fair value gap. So let's check for this last fair value gap. Let's check from this is a swing high and a swing low. So on this small um price leg, I want to take this cognizance of this fair value gap. So fair value gap. Okay, yeah, so I want to take cognizance of that fair value gap, and also let me extend it to the right before. Yes, let me extend it and then lock it. So I can also check out for this fair value gap here. There is a fair value gap here. Watch. Though I'm looking for a swing low for me to call a place a what's it called, a last value gap. So I want to use here as a last value gap because of this swing low, this swing high. Sorry. So let me mark it out. I will mark this one out as well. Okay. So most likely I'm expecting price to get to this fair value gap, but if it doesn't, that's fine. Or this one, but let's just, it's okay. We can work with this. So once price get to these key levels, I want to see either a reversal or a retracement. But from the daily charts, as we can see, we want to see price. I don't want, okay, let me still go back. I didn't really want to go back so that everything can still be in order. Now I told you that price has taken away this, has taken this low, displaced it, these lows. So I want to see a swing low formed. You understand? I want to see a swing high form before price can start going down, if price really wants to go down. So because of that, I'm expecting some kind of bullish run, on the lower time frames. But on the big time frame, I want to see a swing high, then I cannot go down. You understand? Why for this one? Now this is why you need to be very careful. Remember, price has also taken this high, so which means a swing low here is needed to take it up. So which means you have to be very, very careful. If a swing low forms here, we all know we are going up because of this. And then if once you target your 30 pips, just stay on the sideline. You understand? This value gap is also another key area I need to take note of on the daily chart, or this value gap here now. But I don't want to get this to confuse you. So once you do that, just be very, very careful about your stand. That's what I'm trying to say. We are reading price logically. and anything can happen. Don't worry, all these things might be getting over your head. You might be confused at first, but over time they're going to make sense to you, and it's just going to be your thing. Like, it's simple to work with. Okay, so now price moved from this bearish, I'm taking here, this bearish stand all the way down here. Now when it was going up, if you use your fib from here, I don't really want to go into that. I don't want to make this complex. From here to here, you can see this your fib. See that price has gotten to the 79% about the OTE level, so shooting down. And because we are bearish, you are only going to expect price to reverse or react. It's not going to reverse. Let me explain what I mean. Because generally we are bullish, price might not necessarily come and take away this low. You understand? But assuming we are bearish, price will definitely come and take this what is it called, this low. Now we are bullish, price is definitely like have high chances of taking away this high once next week starts. Please take note of this level, 29.694 level on gold. Please check it out next week. So check it out, you will see. Today is what? This is Friday. Okay, excuse. Let me get rid of this and so I can see clearly. This is Friday, 24th December. So check 25th and know if price will get to this point, so that I see what I'm talking about. Now at first these things might not make sense to you, so let's break down into what is it called, the intermediate time frame, and see what we can do out of this. So price got to this point and traded to this fair value gap for the first time. So once price goes to this fair value gap, I'm looking out for what? An opportunity to sell. Now somebody wants to know, why do you want to sell? Why do you want to sell? These fair value gaps, they form lines of defense. Fair value gaps and old highs and old lows, they form lines of defense. Once price get to them, there is a likelihood that price will either reverse or what is it called, retrace. So once price gets to them, if they are bullish, they will turn to bearish, and if they are bearish, they turn to bullish. So there is always a reaction when price get to these key levels. Let's go to 1 minute chart, because that's where I trade off. I trade from this 1 minute chart, and I told you why, so that I can risk very little while I have chances of making more. Who wouldn't love that? Okay, so look at this. When price came to this fair value gap, look at the high I'm seeing. I'm considering this high. This is a significant high, so I want to see price break it, but price did not break it. Price kept going up. This low rejected, which means price still want to go up. As you can see, price still want to go up. Okay, so let's keep going up. Price is not yet ready to break, so under rejection. I don't know if you can see. So it's not about seeing that price is coming down, you say it's shifting market structure. That is not shifting market structure. Just be careful, watch what price is telling you. Now all of a sudden price came here, taking away all this low. Once price does that, what are we expecting? Expecting what? A swing low to form, then we can go down. So from here you can sell, and you see price really went down. I don't know if you see what I'm telling you, but apart from that, it's not just about selling. From here, if it's me, from here I will mark to this point. I will mark here because this was the displacement leg. I will mark to this point. So either from the highest high or from the current leg. Once price comes to premium, I will sell. This is because smart money sell in premium and buy in discount. Still keep it here, it will still take you to the equilibrium level. Okay, though if you use this stance, if you use this analogy, you might miss an entry, but it's not bad to miss an entry because you are on the safer end. So what am I trying to say? If you don't understand what I just said here now, just simply sell here and keep your stop loss here or here. You know how to do your risk management. That's not what this lesson is focused on. So then you just target any fair value gap or any high here. You don't need to take it all the way down, because remember, generally we are bullish. So you see that from here, if you took an entry here, let's look for a sell. So if you sell here, yes, from this point, if you sell and you put your stop loss, let's say here, and you're looking for 1:2, let's see, 1:2 should be around, okay, just a moment, 1:2, watch price. Okay, didn't get to 1:2. Okay, it got, yeah, let me show you. Let me use the original. Look at it here. It came here, though it's going to scare you off. When you see this, you might be afraid, but this is beautiful. These are now entry technique, but this lesson is not focused on entry technique. Once price comes down from an FVG and then retest it, definitely shooting down. So you see that 1:2 will work, You can also, me, I don't like doing just 1:2. I like to anchor them on the nearest, the hanging fruit, the nearest high, the nearest lows, because you are bearish. If it is bullish, I'll talk about highs, the nearest lows, and I'll take my profit around any of this place. So that's beautiful. You see how we are able to identify a shift in market structure accurately. So let's go back to that 15 minute chart. Let me do one more example, and then before we, we'll call it the end. So I've given you a bearish example. So let's do bullish. Now, price came back to this value gap again, you sold, came again, you sold. So let's talk about low. So at this very point now, price took away this what is it called, this low. Whenever price, and this is also a swing low, though it's not clear. So I can as well still mark it. Let me use this. This is a swing low. Yeah, so whenever price takes away a swing low, what do you want to do? You, at that point, you want to look for what, an opportunity to go the other way. So we have been bearish, now we're looking for opportunity to do what, to be bullish. Yes, to be bullish. Okay, let me show you instance now, because some of you might still be confused. Why are you selling now? Please check out the last lesson on OTE model. I think you have some reference to this. Now watch this. From this low to this high is a bullish run. So once price came down to this OTE level, which aligns with this what is it called, this other block. I don't talk about other blocks now, I don't want to confuse you. Now you can buy. That is one reason why I'm buying. But apart from that, and that is why I'm buying, because it has taken what, this old low. So I'm looking out for a buy opportunity here. That's what I'm looking at for right now. So let me just use the rectangle. Okay, so let's break down to 1 minute. That's why I trade off. At first, this lesson might not be clear to you. Please do well to watch this video as many times as possible to make sure it makes sense to you. So immediately price, look at this. We are going to focus on this this kind of blue line or green line. I don't know the shade I'm using because I reduced the opacity. So these two lines are our focus. Immediately price came to this line. We are looking for what, a high to be broken. Watch, this was a high, but I'm not taking this high because I'm taking the high after price has gotten to this place. In fact, for me, I would like it to really deep inside for me to trust it. So a high was from price, not take this high. Watch, it now deep inside. Beautiful, beautiful, beautiful. So now at this point, price, when price dipped inside here, price used the body. Let me increase the size of the candle. Price used its body to displace every one of this high here. Once it displaced it, what am I waiting for? I'm waiting for a swing low to form, then I can buy. Then if you watch this displacement leg, look at this displacement leg, using my gun box, let me check. This is the displacement leg from here. Yeah, if you watch now, you see that price came back to premium. So sorry, to discount, because what's it called in, okay, I know what to do. Just a moment, I want to start from here so that I can be clear. Exactly. So we buy at discount and sell at premium. So now we are buying. We want price to get to this green area discount so that we can now buy and target the upside. Now because we are buying and we want to see price go up, you can now take your time and look out for all the key levels we've identified. So this is a key level. You can target this key level, go up again. Okay, that one is still very far. The other objective is still very far. Yes, but price will likely still get to that place. So, and if you check from here, you can comfortably get 1:2, and it makes sense. So this highs here should be your target, because we are in sync with the right will I say tune or narrative of the market. So what am I trying to say in essence? When we are bearish and your entry or your shift in market structure align with bearish, look out for handsome TP, your take profit, that is profit. But when you are in bearish and your what is it called, shift in market structure is giving you bullish, please be very, very careful, nimble. If possible, don't even take that trade. You want to trade in alignment or in sync with the daily bias and the higher time frame analysis. And apart from that, always wait for displacement, not when the wick just little bit poke above a high. Wait for the body to clearly take a high, a swing low forms on the other side. I hope this makes sense to you. So one more thing before we end. In this channel, I promise to give you valuable content that are worth your time. So help me do something. Please subscribe, like, and comment. I would like your review so that I can keep putting up something as amazing as this. Thank you so much for the time. I appreciate.